Martin, how big a moment is this then in the metal market that you have covered for a number of years, of course?
It's a very big moment. I think Jill, who was speaking earlier, is absolutely right. This 50%, the tariff on copper was well telegraphed. Trump's been talking about putting levies on imports of copper since February. He said he wants to bring copper home. Make of that what you will. But the 50% level is what is the surprise here. The market was really pricing in, and analysts were broadly expecting a 25% tariff. So this is significantly higher than expected, and it's really got people a little bit on the back foot in terms of scrambling to understand what's going to happen next. The reason why 50% is considered very high is because the US is actually particularly reliant on imports for its manufacturing industries, far more so than in steel, for example. So it is going to leave certain pockets of manufacturing potentially in the US potentially facing much higher costs. For the copper market, in the interim, we've seen that kind of flare up in the spread of the US price over the global London Metal Exchange price. It went up to a record of 25%. The US market is reasonably well supplied in the short term because traders have been sending a lot of metal to the US in recent months ahead of tariffs. That trade's now closed. So there's copper in the US, which will kind of soften the impact in the immediate term. But in the long run, I think people are asking, where's this US copper going to come from?
And on that point, Martin, you talked about the inventory build-up in the US as traders kind of foresaw potential tariffs. Copper prices then hitting a new record yesterday in terms of the pricing and the session yesterday. What are analysts telling you about where that pricing story goes from here if these tariffs of 50% are in fact implemented?
Well, you've seen the immediate impact in the US with the price spiking. But I think what's interesting is that the LME prices actually come down a little bit. That really speaks to the idea there's going to be a little bit less pressure on the rest of the global market if major producers have to divert metal away from America. In the US, there was an interesting point from Macquarie in one of their comments this morning, saying that 50% is a level where it starts to become demand destructive in the US. It's going to put off buyers of copper-containing goods if manufacturers try and pass on those costs. So you might see it as actually bearish to some extent, even for the US prices in the next few months.